Okay, so you have your trading strategy. You know exactly what your rules are, you have them outlined. You can even tell somebody what your strategy is. But for some reason, every time that you're live in the market, whether that's a demo account, you're paper trading, or you're trading with real money, you find it hard, either consistently or at times, to stick to your trading plan. Now, your strategy isn't broken, you are not broken. It's just that you're finding it hard to stick to your plan when your emotions are heightened in the market in real time. Welcome back to my channel. My name is Naomi. I'm a cognitive behavioral therapist by background and I trade. And on this channel, I focus more on trading psychology and looking at that from the perspective of cognitive behavioral psychology. If you've not heard of that before, it's just really looking at the relationship between how we think and how that makes us feel and how we behave, and ultimately how all of that is affecting your trading performance. So I just want to say thank you if you have subscribed to my channel. I've recently had a lot of new subscribers, so thank you if you are one of them. If you haven't, do consider subscribing if you are interested in trading psychology related content. I do typically post once a week, as well as more short form content daily, which I also post on TikTok as well. You can follow me there too. And in this video, my intention is to explain why we find it hard to stick to our trading rules and offer you a way to break out of this cycle. Okay, so you might have experience of back testing, and in that process, you've been able to identify your trading strategy and you have all your statistics there. And when you're back testing, potentially you find it quite easy to do and to actually stick to your rules. But then when you're live, it's quite difficult. Or maybe sometimes you might look back on a particular move in the market, and then in hindsight we have that bias, don't we? We call it hindsight bias, where we look back and think, oh, I should have done this, or I should have done that, or I knew price was going here. But that really is a bias. You have the benefit of having that information now, but you didn't have that information at the time. So why it becomes really hard to follow our rules in real time is that uncertainty that's there the whole time that we're trading. So that's whilst we're waiting for our setup to appear, and then when we are actually in the trade, there is uncertainty there. So there is the unknown. We don't know what's going to happen. We don't know if our setup will appear. We don't know if price will form in the way that meets our criteria. And then when we're in the trade, we don't know how price is going to move. We don't know what direction it's going to move. Yes, we have an edge, and yes, we're hopefully only taking high probability setups, but within that, there is still uncertainty and there is still losses in there. So it might not go where you want it to go. So this uncertainty can cause discomfort in us as humans. That's just natural. As humans, we don't like uncertainty very much. We can find it to be quite stressful, maybe even upsetting in different circumstances. So this is a trigger for us, and this is the main issue. When we can't tolerate uncertainty, that's where we then deviate from our plan. That's where we then start breaking rules. And now what I want to do is introduce the cognitive behavioral perspective to unpack this further, to help it make sense to you, to really break down what is happening in that moment. So let's say, for example, you're trading, and then let's take a really specific, clear example, and let's just say that a candle has formed, you've seen your setup that you need. Okay, whatever that setup is, everybody has a different trading strategy and they look for different things. But let's say your entry criteria has been met and you can see it. And so this is what we call like the trigger. The trigger is just something external to you, it's outside of you, it's something that's happening, it's something in your environment, and it's something that we have no control over. Okay, so you have that trigger, your setup has formed. And then what happens is we have thoughts that pop into our mind, intrusive thoughts. And we have these thoughts all day, every day. It's that constant chatter that's going through our mind, okay? And in that moment, you might have a thought of, what if it fails? What if I'm wrong? Okay, and so that thought is very automatic and it just pops into your mind. Now, if anybody was in that situation where they saw their setup and they had this thought, what if it fails? What if I'm wrong? And let's say they strongly sort of believed in that thought, then that would naturally lead to particular emotions such as fear, okay, anxiety. Okay, so you can see that natural relationship between how you think and how you feel. Now, when you feel anxious or fearful, your body also it manifests in your body. So you might notice physical sensations. You might notice, or maybe not even notice, that you've got a bit more tension in your body. Maybe your posture's changed. Maybe your shoulders are getting closer to your ear. You're hunched over at your desk, and maybe your heart is beating faster. And all of that is a very natural response, and that's part of your fight or flight response. It's your threat system, which has been built in us for many years, and it's triggered when we are in stressful situations. And it is helpful when we are in a life-threatening situation. It can help us to run away or to fight, but that system is also triggered just through worries, okay, or just imagining something threatening, okay. And in this case, in trading, it can be triggered by thinking, what if I'm wrong? What if this fails? Okay, so you've had that trigger, your setup is forming, and then you have intrusive thoughts which make you feel anxious and fearful, and then that is what then leads to changes in your behavior. Okay, so that's where you then will break your rules, okay, because the thought of being wrong, or the thought of losing, is so threatening to you that you're now going to do what you can to prevent worst case scenario from happening. So you might exit. First of all, you might skip the trades, you might not enter it at all, you might notice a bit of hesitation first, okay, and then maybe just price moves without you, and now it's kind of not worth entering. Or maybe you take a later entry and now your risk to reward is messed up, okay. So that's where you get the hesitation. You might decide to skip the trade completely, and again, what you're doing there is not helpful, because actually you're skipping good setups, okay, and missing out on opportunities. And if you do enter the trade, it can lead to you really watching it so closely, because of this thought that came through your mind that you could be wrong or it could fail. So now you're what they call babysitting the trade, which may or may not be very helpful for you, because now when you're babysitting the trade, you're open to more triggers, okay. You're watching price reverse slightly, okay, because we all know price doesn't move in a straight line, unfortunately. I really wish it did. It would make all of our lives much easier. But now you're seeing it dance around a bit. It's retracing a little bit, then it's going in your direction, now it's retracing, so it's maybe range bound. And all of that is it can be very emotive, okay, when you're watching it so closely, as opposed to if maybe you just sat with that uncertainty and just put your attention onto your trading plan as opposed to the tick by tick price movement. And then again, that can other behaviors that can come from this is actually deciding to exit the trade early before your actual exit criteria, okay, before your predetermined levels. So you can really see how it just becomes almost this vicious cycle. But what I'm hoping you're getting from me here is how we have situations that happen, okay, outside of us. Price has, or a setup has appeared, and then you have an intrusive thought pop in, a negative automatic thought that says, what if this fails? What if you're wrong? That naturally leads to feelings of anxiety and fear, which naturally leads to unhelpful behaviors, some of which might be hesitation, skipping a trade, exiting the trade prematurely, or babysitting the trade. So I really want to emphasize that these typical behaviors that we all can relate to at some point in our journey, or even now we might struggle with it at times, and going forward may still struggle with it. I really want to emphasize that it's so natural given the way that we're thinking in that moment and how that's making us feel. But what is so empowering about this cognitive behavioral model is that we can choose how we are going to behave, and we can choose to behave differently. And you can see that if we just had different behaviors, it would lead to different outcomes. So our trading performance would improve, we would be more profitable, we would be more consistent, okay? And also how we think can change as well. We can challenge the thoughts that are popping into our mind. Yes, they're very believable. Yes, they're personal to us and the situation at the time. But thoughts are not facts, they're just thoughts and opinions, okay? So they can be challenged. And if it feels difficult to actually challenge those thoughts of, oh, what if I'm wrong? Or what if I fail? If that feels difficult to find an alternative way of viewing a situation, you can choose to not challenge it, but to just notice that it's there. Just become an observer almost of your thoughts. It's this idea that you are not your thought. It's just a mental event, something that has popped into your mind, and you are going to choose how you react to it. In a way, you might just choose to let it pass. Notice that it's there and go, oh, there goes that thought again. There goes that worry that this is going to fail. Okay. And it's a bit like seeing a train go by, and or a bus, and saying, you know what, there's that train, there's that bus, but I'm not going to get on it because it goes to this horrible place, this horrible area. I'm just going to watch it go past. And you can choose to react to your thoughts like that as well. Whenever you notice worries popping in, just notice that it's there. And if it's not helpful for you, if nothing positive is going to come from it, you can choose to just let it pass and put your attention, choose to gently put your attention back onto what is helpful, and that is your trading plan. Saying to yourself, I'm going to get out of this trade when my exit plan tells me to, or I will get into the trade when my entry plan tells me to. So I really like the cognitive behavioral approach. It suggests that if you want anything to be different, you have to do something different. So if you want change, you have to be ready to make changes, okay? And these changes can just be subtle shifts in behavior or in how you're thinking, which will lead to different outcomes. We've already illustrated and explored the vicious cycle that we can get stuck in, having worries that makes you feel anxious, and then it leads to certain behaviors that were not in your trading plan. So we can actually reverse that cycle. We can break into that loop. So that's what I want us to think about now. I want us to think about, okay, how can I make this a more virtuous cycle? How can I change my behaviors and my way of thinking so that it leads to the outcome I want? Okay, so one of the first things we want to think about is really this idea of uncertainty. And I do talk about this a lot, but I believe this is often the main issue or challenge that we have as humans when we're trying to trade. Okay, we cannot avoid it. We cannot avoid uncertainty. But when we are skipping a trade, when we are exiting a trade early, what we are actually doing is attempting to make a situation certain. By skipping a setup, you are 100% certain you haven't failed. You are 100% certain you haven't lost any money. So in the short term, you get a sense of relief. It's like, oh, I haven't had to take the risk. But then what happens is that it turns out to be a winning trade, and you feel so frustrated and annoyed with yourself. And then the self-attacking thoughts come in, and again, it's another vicious cycle in and of itself. You start to lose confidence in yourself and your trading strategy. So we don't want to try to make things certain anymore. What we want to do is build our tolerance for uncertainty so that we can stick to our trading rules. Okay, in real time, when we are trading, there is uncertainty there, and what that naturally does is it makes our emotions a bit more heightened. There's a level of discomfort there. Okay, so the best fix for this, the best long-term fix for this, is to build your tolerance for uncertainty. Yes, in the beginning, it's going to feel uncomfortable because that's our baseline. It feels uncomfortable at the moment. But with time, as you start to practice sitting with uncertainty for longer, you will build your tolerance for it. You will build strength. It's a bit like weight training in the gym. You'll start with a weight that you can manage, and then with time, that muscle grows in strength and you can lift heavier. And that's exactly how it translates in trading. The more you expose yourself to uncertainty, the more you allow yourself to sit in a trade without babysitting it, the more you allow yourself to enter trades when you see your setup and sit with it, the easier it will become. And as I say, it will still be difficult initially, and expect it to feel like that. And when it does feel like that, don't think you failed. No, we know it's going to feel like that, but you sit with it longer and longer. And as I say, you build that strength there. Okay, so that is the first thing. Give yourself the opportunity to build your tolerance for uncertainty. Okay, and the other sort of mindset thing is to try to be as neutral as you can. Okay, because as I said, there is uncertainty there. Yes, you have an edge. Yes, you're only going to hopefully be taking high probability setups, but you need to align your mindset and your thinking with the fact that anything can happen in the market. So you really want to just catch yourself if you are noticing yourself thinking in terms of certainty. Okay, you don't want to be predicting, you want to be responding as a trader. It's the idea that when your setup appears, you do what you're supposed to do. You enter the trade, you manage your risk, you set your stop loss level, or you set your take profit level if that's how you manage your trades, or you make sure ultimately that you know what your exit criteria is. Okay. And that can help as well, because when we cling on to any particular expectation, if that is not met, then it leads to more vulnerability. Okay, it's more distressing because we believed so much that something was going to happen, but the market doesn't work like that. Okay, remember, it's an edge that you have. It's an edge, it's not certainty. So what the cognitive behavioral model invites us to do is actually make changes. And this comes in the form of assignments or homework, whatever you want to call it. So if you are really struggling to follow your plan in real time, I want you to take away this piece of, or this action point. Not everybody likes the term homework, but I've got an action point for you that I'd like you to consider doing if it feels right for you, or if you are interested in seeing what the potential outcome of this could be. Remember, we have to actually do something different if we want any change. Okay, so just for 1 week, okay, so the next week, I want you to deliberately choose to record whether you followed your plan. For every trade that you take, I want you to record whether you followed your plan. So that means recording whether you followed your entry criteria, and also if you followed your exit criteria. You can also record whether the trade won or lost. You're probably doing that anyway. But for just 1 week only, I want your focus and your attention to be on checking if you followed your entry criteria and followed your exit criteria. And by doing that, your attention is now going to be on your plan and on your process. And your intention is really going to be on following your plan. And if you do this, and if you give yourself the opportunity to stick to this piece of homework or this action point, you will give yourself the opportunity to see what the outcome of this is. And I don't just mean in terms of trading performance and, how much your trades won and lost, because you will win and lose trades, but over time you will be profitable. And maybe sometimes your strategy will just go through a winning streak or go through a losing streak naturally. So I don't want you to necessarily place a lot of emphasis and weight on wins and losses when you're recording the outcome of this. But I want you to record, okay, what did you notice? By just monitoring if you followed your plan, what did you notice? Was anything anything different? So, for example, you might notice that this exercise actually helped you to stick to your plan, which is great. That's what we want. That's the goal. That's the whole point of this video. So you might notice that, yeah, by just saying to yourself that you're going to monitor and reward yourself for following your plan, that might lead to you actually following your plan. You might also notice, or I want you to pay attention to how you felt during this. Maybe in the beginning you might notice an increase in anxiety because now you're actually sitting with uncertainty for a longer period of time. So that's absolutely fine to write down as well. And as I said, please expect that, because you're actually exposing yourself, deliberately exposing yourself to the thing that causes anxiety. All right, so you might record that. Well, I noticed I was more anxious this week because I was really sticking to my plan. I was really sitting with uncertainty for a longer time. I was holding on to trades. I could see price dancing around. I could see my P&L fluctuating. So yeah, I felt a lot more anxious this week. That could be something that you noticed. You might also record, I noticed that I was able to do it. Like, yes, I felt anxious, but I noticed that that anxiety actually sort of plateaued and then it came down a bit, and I just wasn't really bothered. Like, yeah, I knew I was still trading. Yes, there was a bit of anxiety there, but it wasn't as high as it was initially. Okay. And you might also want to record, okay, so how do you feel? What have you learned from this week? What are you going to take away from this? Does it feel easier now to follow your plan? Okay, so it's really just reflecting. So if you go ahead and do this task of recording if you followed your plan as opposed to focusing more on if it was a win and loss, if you do that and put yourself through that, I really do want you to then reflect on how that week was for you in that way. So I hope you found this video helpful, and I hope you do consider really trying this piece of homework and seeing if it makes a difference, as I said, or make a note of what you notice, okay? And you have nothing to lose. You are where you are at the moment, so there's nothing to lose, only potentially to gain, okay? And it's one of those things where you know what you need to do, you have insight, you have your trading plan, and you're quite psychologically minded already, so you know what you have to do, but there's a gap between that and being able to actually execute it in real time. So I would highly suggest doing this piece of work as an experiment and as a way of breaking out of this vicious cycle. And if you do want some more structured support and help to manage your trading psychology, I have developed a digital course called The Embodied Trader, which supports you through this and gives you further ways of breaking out of this vicious cycle that it feels like you're stuck in at the moment. The details are linked below for that as well. Thank you for watching, and I'll see you in the next one.